Hey guys, welcome back to another video. Today's video, for the first video of the year, we are going to be doing a trade breakdown from a trade that I took just this last week on Wednesday using the expansion model. I hope you guys enjoy. So looking at the daily chart here on ES, this is where my analysis will always begin. I'm trying to find a point of interest in terms of a relevant swing where the market will be reversing from, and then looking towards the next relevant swing for the market to draw in towards. So with my charts naked here, I'm going to be adding some annotations, and then we're going to go into it and see how I'm framing the daily buys. As you can see now, with the help of a couple of markups, the bias becomes very clear. I'm watching this swing low right here, which is forming on Friday after engaging the Thursday low, close inside the range, and then the following Monday expands into the upside. Seeing as Monday did not form a reversal for Tuesday to trade lower, we see Tuesday once more trade open, low, high, and then close near its high without engaging this relevant daily swing high. The reason I'm looking towards this high as a relevant swing is because all of these highs from these previous days are internal to this swing, and so I'm framing this as the most extreme target or potentially a point where the market could form an intra-week reversal and then look to trade a new daily swing back into the downside. So as long as that target isn't engaged yet, we are looking for one-sided price action into the upside. The next thing that I'm watching is for this red line right here. So I've taken Tuesday's range from the high down to the low, and I've identified the midpoint. What I want to see is for a Wednesday continuation to develop in respect to Tuesday's midpoint, and then form a bullish daily profile into the upside for me to position within. So now I'm going to take that logic and I'm going to apply it down into the 7-hour chart. Now on the 7-hour chart, as you can see, we have that reversal down here. The market trades higher again, and right here at 1 o'clock Eastern time in the morning, Asia is trading lower, London is forming a reversal and then closing inside, meaning I would expect for the 8 o'clock candle to form the daily expansion into the upside and into this relevant high. So from here on out, all I need to do is jump down one more time frame into the hourly so that I can refine my signature on the invalidation, which I will talk about briefly, and then look for my entry on the 15-minute or 30-minute time frame. So now on the hourly time frame for Nasdaq, as you can see right here, we have that previous day's midpoint. The market is trading lower into this level and then trades away from it back inside the range prior to 8 o'clock. What I want to do here is I want to look towards this down closed candle as a form of resistance. And because I can see this down closed candle supporting price to the upside, I can also refine my invalidation to the opening price down to the close, stretch it out to the right, and now I am looking at the market to form a reversal in respect to this midpoint. So the market comes down into it, comes back inside, and now I want to see if there are reversal confirmations on the 30-minute or on the 15-minute time frame in order to align the profile to the upside and then position myself accordingly. Now on the 30-minute time frame, as you can see, the market trades lower, puts in a low, comes off of that low, we form a divergence right here with the ES, which I will be blending in on the right side of the screen. And then as you can see, the market trades higher, closes above this down closed candle in respect to this hourly opposing candle, which means that I'm expecting for price to hold here and for the daily profile to now develop bullish into the upside. So the very last thing I need to do is to wait for 8 o'clock and see if I can frame an entry towards my draw. Initially, I will be looking towards this high right here, and then ultimately towards the daily buy side. So right here, as you can see, shortly after 8 o'clock, we get this candle close right above this down closed candle. If I pull over this opening price, you can see that this close is confirmed. And so I can consider this as a potential entry, and I can be looking to position my stop right on this low, which means that I would be entering like this on the close, stop loss on the low, and looking towards the intraday high as initial targets, and then further potential targets. Now, if I go over to ES here, you can also see the exact same thing happening. There's that divergence, the reversal forms away from it. But as you can see, ES is actually the stronger index at this point in time. So you'd probably ask yourself the question, well, why am I not positioning on ES and instead I'm choosing NQ? And the very simple answer here is that notice right here at 7:30, we get this run lower. This is the stop that I'm framing on Nasdaq, but I do not have an opposing candle to frame a continuation away from on the 30-minute chart. And when I look at the 15-minute chart right here, these bodies are not ideal for an entry. So we can see that this candle right here opens, trades lower, closes very close to its opening price, So this is a large wick, and I do not want to position on these types of candles because I don't have much faith in them or would trust them. I'd rather look for a nice large body like this to position on. And so simply because NASDAQ is offering the better signature, despite ES being stronger at this point in time, I'm opting towards taking the NASDAQ just like that on the 30-minute chart, having a more defined body, a bit of a more decent signature, and then positioning myself towards the highs. Now, all that's left to do is to obviously take the entry. So we're going to be getting in right here, one contract, put our stop on this low, look towards the highs, obviously for partials, and then further objectives. And as you can see, the market trades all the way up into the buy side and then tends to expand itself further all the way up into the daily buy side, which is where the last runner was taken. Now, the very last thing that I'd like to talk about on the 5-minute chart is, of course, the management on this trade position. Seeing as we are getting a very, very strong risk reward out of this position, and I'm not looking to hold a full pull all the way into the objective, I'm constantly running down equity. So right here, as you can see in the trade screenshot, we are taking some of our position off on this initial drive at 9:30 in towards the buy side around 2R, and then we are scaling on new highs being made throughout the day all the way up until our buy side objective, all the way at the highs, with the last runner being taken off right at that point. That way I'm preserving myself in the sense that if the trade were to only run towards this high and then flip on me, it would not stop me out. I would not be losing out the trade, but I would also be preserving myself and gaining at least some profits by partialing on the way up and then allowing for runners to really maximize my gains rather than, the market just running up and then immediately reversing and me getting stop break even, or even worse, losing out on a trade that ran 3, maybe 4R because I'm looking to be greedy. In the exact same way, this right here could have been framed as a potential invalidation where I could be trailing my stop loss to. Because I'm scaling out the majority of my position here, all I'm looking for is to trail my stop to break even. And I want to allow this trade to breathe and really continue running, because should I get stopped out break even on those few contracts that are left right at the end of the trade, it's not going to make much of a difference. But if I can allow those runners to really do their thing and extend themselves to the upside, the profit massively outweighs the break even or the potential loss from having it here at this point. But of course, seeing as the market has already engaged these highs and is really pushing into the upside, I don't see a logical reason for it to return to this low, which is where my stop was positioned. And so therefore I do not need to keep my stop right at the low as I was prior to when I was entering, or as I entered into 9:30. I can start to just trail it break even, give it some breathing room. So going from this right here with the stop on this low, like that, just to break even, instead of trailing it into this low right here and then getting swept out only for the market to continue. And as you can see, if I were to assume this right here and then place this right there, the runners would have been trailed out at 1.7, give or take 1.8R. Had I trailed them to this short-term low, break even, they were never tagged. But then the last runner that I kept in essentially ran for 7.7R. So the payoff on that is way, way higher than it would have been if I were trying to be super conservative with it and trying to trail my stop on every single new invalidation as the market is pushing higher. I hope you guys enjoyed this video. Obviously the first video of the year. We're going to be looking to get more consistent uploads in, so you can probably be excited for something sometime next week. And I will be pushing the edge a bit on this model, so you'll be seeing a lot of new trade breakdowns, especially trading this style. I hope you enjoyed it and wish you all an amazing weekend. Have a nice one. Bye-bye.